Are you an accountant or someone studying accounting? Stop! You shall not pass. This video is not for you. This video is made unapologetically for business leaders of new and old businesses so that they can understand what business accounting is and how to make use of it. Because let's be honest, we all kind of just pretend we understand balance sheets, P&Ls and cash flows, but without a deliberate effort to understand them, they become something that we continually dodge. Let's try to fix that for you in this video. Hello and welcome to season 2 on the channel, the one where you start building a fundamentally stronger business. I suggest you subscribe or this puppy gets it. Business accounting is essentially made up of 3 statements or reports. The income, or sometimes it's called the P&L statement. This is a summary of income earned and expenses incurred by a business over a period of time. It could be a week, a month, a quarter, a year. So when you have this document to look at, you can understand how much money has entered the business, how much has exited the business, and what profit or loss is left behind. The balance sheet, this explains to whoever's looking at it whether the business is financially stable. In particular, whether it has enough assets to cover its debts, if it can repay the business debts and associated interest if the need arises, whether the assets are being used well enough to maximize profits, and if investors are earning a good return. The balance sheet answers all of these by summarizing assets, liabilities, and equity in the business at any given time. The cash flow statement. This one's my nemesis. Well, this guy is all about recording the movement of money in or out during a period of time. Some businesses even use this to calculate future money movements in their business too. It's not about calculating profits, etc. The point is to see if you have enough money to pay your bills, and if not, the idea is to warn you so that you can take action. All of the information that is fed into these reports is collected from your day-to-day trading, records, bank statements, receipts, and invoices. More often than not, the data is fed into an accounting software like Xero or QuickBooks, sometimes daily, weekly, monthly, or even quarterly. With some jiggery pokery and knowing which buttons to press on the accounting software, this processes the data and collates the information and generates these 3 statements for the dates or periods of time that you want to see. Okay, are you with me so far? The question now is how and why is this important to you and your business? Before we can wrap our heads around the answer to this, I want you to think of the anatomy of a flower. There's a point to this, I promise. In the center of the flower, you have the main nexus of the flower, where the reproductive, feeding, and anchoring of the flower petals happen. On the outside, we have the colorful petals, which is what the flower puts out into full view for the world. I want you to think of your business much like this. In the center, you have the main business unit, which is the nexus that anchors all the business transactions you're conducting in your business on a day-to-day basis. These business transactions are the petals of your business flower. If we zoom into the petal or a business transaction, each one is made up of all your client-facing activities, such as marketing, sales, operations, manufacturing, logistics, and fulfillment. Zooming back out, your flower can have hundreds of such transactions or petals. We're going to stick with this analogy for a little while longer. Sometimes during your transacting with your customer, occasionally you or your team might get things a bit wrong. But the good news is, unless it was a gross negligence, the integrity of the business as a whole should remain intact, and you more often than not will have another transaction opportunity to get it right. Looking at the business unit by comparison though, in the center of the flower, there's only one of those. If something is mismanaged at this level of the business, the health and the wellness of the whole flower is compromised. One could even argue that a large part of the business leadership role is to protect the business unit from harm and any danger that's coming in its way. It's in this endeavor of keeping your business healthy and performing well, where business accounting processes and reports act as a on-paper health check for your business. Now, these paper health checks don't exist for your personal perusal, some light bedtime reading before you go to bed. There is a real value for you and your business to put your best foot forward and cultivate a business that really shines in these documents. Let me explain. I would say on the whole, there are 5 types of people who are most concerned with the business unit performance and its health. First, we have you, the leader. You want to make sure that you're on the right track and there aren't any red flags that urgently need your attention. Second, we have the investors. Well, they want to know that their investment is safe and that it's growing in your company. We have lenders. They want to make sure that you're healthy and profitable and able to make your repayments on time. Then we have regulators in the UK, that's like Companies House. Whilst they're not necessarily bothered by your profit levels, they need to collect records based on generally accepted accounting procedures. And then finally, we have the tax authorities. Well, this one's an easy one. They want to know your business happenings so that they can collect tax, which may be due. Now, let's look at those three financial statements again. The income or the P&L statement, balance sheet, and the cash flow statement. The business leaders, investors, regulators, and tax authorities are looking at the P&L report. Now, regulators and tax authorities, they're more about compliance. So there's no real brownie points for being an uber profitable business for them. But when it comes to business leaders and investors, having a P&L statement that shows healthy profit margins and controlled expenses can be a massive confidence boost. If you can activate your thinking to see the income statement like a take-home report card that we used to have at school, which increases the worth of your business, you will suddenly find the motivation and focus to make that extra sale or to get hot on controlling expenses. So definitely connect with this document and learn to read what it means. I have a video coming on that soon. I even know leaders who are pulling a P&L every month to help keep themselves motivated in this way. We then have the balance sheet. Obviously, compliance bodies like regulators and tax authorities are interested in these, but the ones we're really wanting to show off this document to are the investors and lenders. When a business has a healthy asset file and comparatively smaller liabilities list, investors and lenders are excited to see the tangible value, which we call equity, in your business. This is as important as the P&L figures. Some would even argue a positive balance sheet is even more important. Assets include things like cash in the bank, inventory, property, and owned equipment. You can even hold investments such as securities as assets, along with prepaid expenses and money owed to you from other payers. The more you have of these assets and the less loans and money you owe other people, the more your business is seen as hot property and one worth investing in and lending to. Who wouldn't want that? So be sure to keep your balance sheet at the back of your mind whenever you're considering how to use your business funds. Finally, we have the cash flow statement. Of all the interested parties, it's you, the leader, and the lenders who are thinking of lending to the business who want to read and rely on this statement. Now, I personally still get the heebie-jeebies when I have to draft this statement, but I have to admit, this statement is the fastest way to get to know exactly where your business is going to stumble. And if you get good at getting this document as accurate as possible, you'll be months and months ahead, so you can pivot your strategy in a meaningful way to avoid those problems that are coming ahead. Personally, having detailed and accurate cash flows has helped me negotiate some fantastic business mortgage deals. So as much as I feel the heat when I have to draft one of these, it's something worth you learning to build and read for sure. Okay. That's enough accounts for today. You did well to get this far. Over the next few weeks, I will be publishing more detailed deep dive videos into each of these different sheets so you can learn how to read each of them. So be sure to subscribe to this channel and like the video so the super helpful algorithm brings you back here for your next business accounting class. Saying that, before you leave, let me share with you this final thought. Did you realize how business accounting and the three statements are focused on data of things that have happened in your business, i.e. the past, and its interpretation? They actually have limited use in helping you decide where and where not to spend your money on a day-to-day basis, as in looking to the future. Over the years, I have come to understand that business accounting is not money management. There is a very different technique I use for this, and something which I explain in this video here, which I recommend if this is a pain point for you in your business. Until the next one, you've got this.